You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, second day of January 2025. Gotta get used to saying that, 2025. Anyway, thanks for joining. Sorry for the late start. A little technical issues on this end, but hey, here we are. All right, let's get rolling. Our daily devotional today, we are still in strengthening your faith through the heavenly gifts, the gifts of the Spirit, which we are now in day 10 of 12. So if you missed the first 9 days, you can always catch them on our YouTube channel, youtube.com/CFRN. Today's scriptures, 1 John 4, 1 through 3, and I'm going to share from the Message translation. My dear friends, don't believe everything you hear. Carefully weigh and examine what people tell you. Not everyone who talks about God comes from God. There's a lot of lying preachers loose in the world. Here's how you test for the genuine Spirit of God. Everyone who confesses openly his faith in Jesus Christ, the Son of God, who came as an actual flesh and blood person, comes from God and belongs to God. And everyone who refuses to confess faith in Jesus has nothing in common with God. This is the spirit of the Antichrist that you heard was coming. Well, here it is, sooner than we thought. Today we talk about asking for the gift of discernment. That is one of the gifts of the Spirit. There are 9 in total. Asking for the gift of the discernment of spirits is an important step in the Christian life. The Bible exhorts us to not believe every spirit, but to examine the spirits to see if they are from God. This gift helps you recognize when something comes from God and when it does not. There are many influences in the world, and not all of them are good. Discernment allows you to distinguish the voice of God from the other voices that could confuse or distract you. Asking for this gift does not only mean recognizing evil, but also understanding God's will in the situations in which you live. Discernment of spirits helps you see beyond appearances and understand what is really at stake, especially when it comes to important decisions or people trying to influence you. It can also help you recognize when someone is speaking for God and when their words do not reflect the truth of His Word. When you ask for this gift, also ask for wisdom and humility, because only with a pure heart and ready to listen to God can you truly understand what is right. It's not about judging others, but being sensitive to the guidance of the Holy Spirit. Let's pray. Heavenly Father, thank you for your word that guides us in truth. Help us to discern the spirits, testing everything against the confession that Jesus Christ has come in the flesh. Keep us grounded in your truth, standing firm against deception. Fill us with wisdom and the Holy Spirit so that we may walk faithfully, glorifying your name. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Thursday. Hope you had a safe and happy New Year's Eve and New Year's Day. We're now back after a little vacation, a staycation for me. Perhaps you traveled somewhere, far or near. I stayed at home. We're safe. All right, let me give you the numbers from around the world. Start in the U.S. with the cash markets, or the indices, as they're called. The Dow's up 118 points. The Nasdaq's up 116. S&P 500 is up 27. And the Russell 2000 up 21. Now for the Russell, that's almost 1%. In the commodity basket, crude oil up $1.87, trading 73.59 last. That's a gain of over 2.5%, or $1,870 per contract traded. Gold, starting out the new year with a bang, up 32 points, trading 26.7340 last. That's a gain of 1.25%. And silver, up 78 cents. Go silver, back over $30, trading 30.03 last. That's a gain of almost 2.75%. In the Asian markets, at the close, Nikkei down 386, 1%. Shanghai down 89, 2.5%. The Hang Seng down 436, almost 2.25%. And in the European markets, at the close, the FTSE up 87, over 1%. The DAX up 115. The CAC up 13. So we had a red day in Asia. It was a green day for the UK. And so far, it is a green Radio Thursday here in the US of A. So let's take a peek at the news. I know you've heard it over and over every time you turn on the TV or the radio, but we got to talk about it. At least 15 people were killed and 30 injured after an attacker intentionally drove a pickup truck through a crowd on New Orleans' Bourbon Street during New Year's Eve festivities. Officials are describing the attack as an act of terrorism. The driver was killed in a shootout with police shortly after exiting the vehicle. Officials have identified the suspect as 42-year-old Shamsuddin Jabbar. As of this writing, details remain forthcoming, though Jabbar was said to be flying an ISIS flag in the bed of the truck during the attack. According to reports, Jabbar, a U.S. Army veteran and U.S. citizen from Texas, said to be outfitted in full military gear, shot 2 first responders, both of whom are in stable condition. City officials said barriers to prevent attacks installed in 2017 along the street were being replaced and had been removed in November. Federal officials had some, but not conclusive evidence Jabbar may not have acted alone. While no evidence as of late Wednesday linked the two events, officials are also probing the explosion of a Cybertruck outside the Trump Hotel in Las Vegas that killed the driver and injured 7 others. I think the statement they were trying to make, parking a Cybertruck in front of a Trump hotel, I don't think I have to explain that to you. Puerto Rico suffered an island-wide power outage early morning on New Year's Eve plunging millions of people into darkness as officials continue to grapple with a faulty power grid. As of yesterday afternoon, less than 5% of customers remained without power. The U.S. territory has suffered from frequent power outages over the past 8 years. In 2016, a fire significantly damaged one of Puerto Rico's largest power plants, while 1 year later, Hurricane Maria devastated the island's already aging power infrastructure. The total damage from Maria was estimated at $90 billion, and blackouts persisted into mid-2018, ultimately becoming the second worst blackout on record. The somewhat unique relationship between Puerto Rico and the U.S. Residents are U.S. citizens, but lack meaningful political representation, and that has left the island at a disadvantage, making it difficult to receive federal funds to repair infrastructure. Estimates to modernize the power grid have been in the range of $20 billion. But we got plenty of money to go fight the war in Ukraine. But we can't get the lights on in Puerto Rico. Odd. Tesla stock is sliding to start 2025 following a big fourth quarter delivery miss and an overall down year for the electric vehicle maker. For the quarter, Tesla said it delivered 471,930 vehicles globally, missing analyst estimates of around 510,000 as compiled by Bloomberg. This figure is just barely above the 463,000 delivered last quarter and below the 484,000 delivered a year ago. Jobless claims. Weekly unemployment claims hit their lowest level since April during the final full week of 2024. In the latest sign that layoffs remain low, data from the Department of Labor released today showed 211,000 initial jobless claims were filed in the week ending December 27th, down from 220,000 the week prior, and below the 221,000 that economists had expected. Meanwhile, 1.84 million continuing claims were filed, down from the 1.89 million seen the week prior. Largely, economists believe the continued low number of weekly jobless claims, combined with relatively steady continuing claims, reflects a low hire, low fire type of labor market. Mortgage rates are up. In fact, they've climbed to an almost 6-month high during the Christmas holiday week, suppressing applications for home purchases and severely undercutting refinancing activity. The contract rate on a 30-year mortgage had advanced 8 basis points to 6.97% in the period ended December 27th, after rising 14 basis points the previous week. Yeah, woulda, coulda, shoulda. Now, you've probably heard about this app that links both of these terrorist events. It's called Turo, T-U-R-O. It's a car-sharing app used to rent vehicles involved in both the deadly New Year's Day incidents in Las Vegas and New Orleans. It's kind of like an Airbnb for cars, allowing people to get paid for leasing their vehicles to other drivers. Users get easy access to short-term rentals, while owners can rent out their vehicles as a side hustle or even a full-time business. Compared with conventional car rental companies, Turo offers lower prices and more convenient locations. It makes a commission on rentals and doesn't have to run a fleet of cars. Turo lists a wide variety of vehicles with some 1,600 makes and models on offer, including the CEO's own Porsche 911 Carrera S. Turo was called Relay Rides when it was founded in 2009 by Shelby Clark, an entrepreneur and investor. The company changed its name to Turo in 2015 as it began to focus on longer-term rentals over quick trips. That year, it was included on Forbes' list of hottest on-demand startups with a valuation of $311 million. Well, I suspect it's going to take a hit after this. Those are the kind of things you can never foresee. Bloomberg says that oil has begun 2025 by rising to its highest price since October, buoyed by bullish technical indicators and shrinking crude stockpiles in the U.S. West Texas Intermediate advanced more than 2% to top 73 a barrel, and Brent climbed above $76. Government data released today showed U.S. crude inventories fell 1.18 million barrels last week, the sixth straight drawdown. Futures edged down from their highs for the day as the stockpile drop was slightly smaller than projected by an industry group, and gasoline inventories rose. And our last bit of news, the dollar's momentum extends into 2025 amid expectations that the U.S. Federal Reserve will cut interest rates by less than other central banks. Demand for dollars as a safe haven is also lifting the currency. XS.com's Rania Gould writes, relatively high U.S. interest rates, coupled with geopolitical tensions, mean that the dollar is likely to stay at the forefront of global currencies, boosting its appeal in the short term. The ICE dollar index rose 0.3%, its highest since late 2022. And the meanwhile, the euro weakens 0.4% to a two-year low of 1.03. The dollar rises 1% versus sterling, but falls 0.2% against the yen. So there you have it. That's the news. Bring it home. All right, Logic 247, our 24/7 around-the-clock E-mini alert service. If you've got this on your Telegram, click it. It only takes a second, and it'll put you right back where you were. You won't lose anything. We're currently in week 335 of Logic 247. And over the last 335 weeks, we've issued over 18,700 individual handcrafted alerts. Valerie did the recap this morning at 7:40 a.m. Eastern. I have not issued any alerts today, so this is current. We've issued, since the markets opened Sunday night, a total of 30 alerts on a holiday week. Still waiting on the outcome of 5. That gave us 25 actionable alerts, of which 5 or 20% would have been stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Over the last 335 weeks and over 18,700 individual alerts, we've averaged 20% or less on a weekly basis of the alerts being stopped out, again based on market structure and that simple process we teach all of our passport holders. So for a holiday week, not too bad. Now, the logic alerts are designed to help you learn how to read the chart. They have an entry price, an initial target, often a second, third, fourth, fifth target, and then a final trade to target. While yes, you can trade them, keep in mind that the purpose of them is to help you to learn to read the chart, to know where to expect resistance, where to expect support, and how to find the windows of opportunity in between. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. So our day session is their night session, and vice versa. Our original alert service, the concierge trade alerts, they're a little bit different. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. Last night they came out right at the open, 6 p.m. Eastern. If you're a member or trial member, you should read this information. It's important. And if you don't understand something, just ask. I'll be happy to answer it for you. So what this means is that last night at the open, all of our members, all of our trial members had all of these targets at the open. S&P 500 Emini, the Dow, the Russell, crude oil, the NQ, gold, silver, and bonds. Okay? All right. I've been trying to get them out 5 minutes ahead of the open, but I wasn't able to do that last night. So, now we can go to the daily chart of the S&P as we do each and every day. And where are we? We are sitting right on top of the lowest fib extension. This is the 24, the 38, the 50, the 62. Here's the all-time historic high. Okay, this was our Santa Claus rally, which bounced off this spot right here, where the step line crossed red and falling, turning it to blue and climbing. And we've bounced off of it once, and it looks like we may be heading back to test that area once again. We're just below the zero line. Now the green line's the BBC, stands for bull bear cross. When price is above the green line, we anticipate higher prices. When price is below the green line, we anticipate lower prices. The pullback to the BBC holds more often than it doesn't. Like here and here, but eventually we know it will trade through, as it did here and here. And then on this pullback, it held for 5 consecutive trading days, taking us up to the all-time historic high. Then we got a bearish cross right here. That's when price ran down to tag this little area that was highlighted in a members only workshop. And we did in fact crawl right back up to the underside of that trend line. And that's where the fun and games stopped. And down we go. So the question is, do we hold here or do we make it here? Where we close today will be important, but it's pretty obvious, I think, to everyone that we are in a downtrend. Now, is this just a retracement and an ongoing uptrend? Well, actually it is, because with the indices, the price always goes higher over time. There's going to be pullbacks, there's going to be sell-offs, okay, crashes, but over time, the price is going to rise. S&P 500, that's an index, the Dow, the Russell, the NQ, all of those. That's how they were created. They're constantly shuffling the deck, taking out weak companies, putting in strong companies. Trading the indices, if you're a young man, or simply buying the indices, if you're a young man or a young woman, is probably one of the simplest and smartest ways you can prepare for your retirement. If you're already at the retirement age, then you have to be a little more aggressive with your action. Okay? And that means trading intraday. The importance of the daily chart is institutional traders, the ones who actually move price. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Has everything to do with account size. So, I suggest you spend 2 minutes each day studying the daily chart of whatever market you're about to trade, whether it's futures or stocks or crypto or Forex or ETFs, because what it does is it gives you a free look over the shoulder of the deep pockets that actually move price. And you're able to identify major areas of resistance that you can't see on your smaller time frames, like today's high. Okay, there was resistance times 3. You had red and falling, you had the step line, and you had the 24% fib extension. Price ran right up into that cluster. This was green all the way up to here. Hit that resistance, sent it back to support, and now we're trading through support. And from here, there's really nothing. There's one little spot right here, and that price is 58.76 and a quarter. Potential support right there before we hit this area. Okay, now once we take that area out, and the next spot for potential support is way down at the 38% fib retracement. This was the 24% fib retracement. And as you can see, we caught a bounce. We spiked it but caught a bounce. That was our Christmas rally, and now this is the new reality. Okay, definitely looks like we're heading for that low. And again, you can see this on the daily chart. You can identify these areas. You can write down the numbers. Then go to your smaller time frames, and you might find that trading with the larger trim is beneficial. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose many years ago, and if it's not broke, don't fix it. When price rises to a weekly trading zone, we expect resistance till proven otherwise. When price drops to a weekly trading zone, we expect support till proven otherwise. The vertical line separates today, Thursday, from December 31st, 2 days ago. Now the open last night, right here, we had a gap higher open, okay, quickly reversed, came all the way down to the short target. Now remember, everyone had the targets when the market opened. Now this candle opened at 59.49 and a quarter and ran up to 55 half. So that wick sticking up there, that's 6 points. You only need 2 points to get your goal for the day. And then we traded down to the short target. When the market finds support, it's going to go look for resistance. Now the pullback to the VVC holds more often than not, but when you've got a strong balloon climbing like this, that may very well be one of the times that it trades through, and it did. And then it pulled back, and the pullback held. And we caught a leg that took us all the way up to 59.75. And you'll notice that that high is right here. See the horizontal line on the cursor? You're always looking left to determine where you may run into resistance or support. That resistance sent us back to the VVC. The pullback held, and we caught a leg, and a retracement, the pullback held, and then we caught another leg that spiked right through that weekly trading zone. This high right here, today's high, we barely took out this high from December 30th. December 30th, we had a high at 93 and a quarter. Today we had a high at 95 and a quarter. Only took it out by 2 points. Okay. Then the next 30-minute candle opened red, and that began the blood in the street scenario. We came back down through the long target, bounced back up to the BBC, red and falling, and the zone where we expect resistance. And that sent us down through this zone, through these lows, and we're probing new territory. We'd have to go way back to find. Well, we haven't found support yet. I mean, we're still falling. We're in price discovery mode. The next weekly trading zone, the lowest weekly trading zone, is down at 57.49. And with a day and a half of trading left, and the bearish stance of this chart, I guess there's a pretty good possibility we could see it by close of business tomorrow. On the Dow, gap higher open. We gapped right up to the long target. And then we retraced all the way back to the short target. We spiked the zone just enough to hit that short target, which was based off this low right here. That sent us up through the BBC, back up through the long target, all the way up to the zone. We spiked the weekly zone, pulled back to the BBC. The pullback held. It holds more often than not. And that sent us up here to that high right there. See it? If you look left, there's almost always a reason. 20% of the time, the market does not do the next high probability thing. We've proven that over the last 18,700 plus trades. So we hit that resistance spot, and the Dow falls, taking out this low from the 30th. Okay, we've only taken it out by a little bit. Okay, but I think it's going to keep dropping. And I think we have one more zone down here at 41,785. That's the lowest zone for the week. From target to target, back to the target, and then back to the short target. Actually, on this bounce, we hit the long target again. On the Russell, this was the opening candle, and we dropped straight to the short target. Support will always send the market looking for resistance. We had blue and climbing. We overcame the BBC. And we had a pullback. The pullback held. That set us up to the long target. And we had a high here, and then we had a high here. This high here was just below this high here. Okay, so failure to take that out sets a bearish picture. And we're headed back to the short target again. On the NQ, we had a gap higher open. We gapped up to the BBC. Pullback held. That sent us down to the short target. If you look left, you'll find the support. That bounced us all the way up. We got through the BBC, and then the pullback held. And then a leg, and then a retracement. The pullback held. Here we had a spike right up to the long target. And then after this pullback that held, we made another run. Okay. Now this target is this bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. And that is a picture perfect example. So that sent price back to the BBC, the pullback held, and that set us up to this high right here. And if you look left, it's this high right here. Okay. On the way up, you got to be looking left. You got to expect resistance here, and then here, and then here, and then the zone. But this one did the trick. Market turned. We made a very fast run down to the short target again. Support bounced us up all the way to the long target. And that resistance there, red and falling, sends us all the way back down to the short target and well below the short target. The lowest weekly zone is down at 20,401. Lots of room to drop, plenty of time to get there. Got the rest of the day and tomorrow. Crude oil, as we mentioned as we were going over the news, this is where we opened last night. The open was 71.85, so it sent us up $150 per contract traded to the target. Then we got a leg, we got a retracement to the BBC, bounce, a retracement, pullback held, pullback held. That sent us all the way up here. And then we got a retracement. Price rarely travels in a straight line. Get a leg, you get a retracement. But the markets were very bullish, and so this was at 8:30 this morning. Price took off, and this doji right here just might show us the high of the day, 73.73. The step line has crossed blue and climbing. Now when the step line crosses blue and climbing, we typically get a retracement back to the BBC. The fact that we didn't here and then started printing a green candle, well, nothing's 100% when it comes to trading. But does it happen more often than not? It does. So the step line has crossed to the right side of blue and climbing, so expect support here, here, right here, and then I would expect, as bullish as this market is, if we do get the deep retracement all the way to the BBC, it will most likely hold and give us a bounce at least back up to the zone at 73.30. But that doji kind of looks like the high of the day. We'll see. Gold finally having a good day. We opened above the BBC. We consolidated here at the zone, making a run at the long target. Got through it. Resistance at the zone sent us back to support at the top of the long target. Now, I've talked about this a number of times. Once price trades through a long target or a short target, it will often retrace, and that target, in this case, becomes support. Where we're trading through the short target, then a pullback could be resistance. So you got to watch that area. Potential support, support. By this time, the BBC's caught up, and we had support right at the long target and the BBC, a leg and a retracement, the pullback held, a leg and a retracement, the pullback held. Here, 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 here. The pullback holds more often than not. Okay. Now, this little double top right here, that may be the high of the day for gold. The step line is in the process of crossing blue and climbing. That should send price back to this zone, which is we would expect it to be support until proven otherwise. Now, 70% of the time when price encounters a zone, you have consolidation. 20% of the time rejection, 10% of the time the slice. Now, when you have a slice like this, where price slices through the 30-minute candle, slices through the zone like it's not even there, when it runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. It did. This is a pretty definitive double top. The step line is in the process of crossing blue and climbing. We can see that price is already retracing. We've got potential support here. And then this area right here, okay, you see where the step line crossed, okay, and then it crossed back. I would call that an important price, important area, and it's right where the BBC is right now. So if we get a fast drop, we should get a nice bounce. If we get to this zone and consolidate sideways, then the BBC will rise to meet price, which is a bit of a different dynamic than when price drops to the BBC. And silver. This was the open. We're above the BBC. We've got blue and climbing. Takes us through the target, takes us through the zone. We did not retrace back to the zone on that slice. Markets were very bullish. Every retracement was met with a quick retest. Until we finally got a pull back to the BBC. That held. And that took us up to the zone overhead, where we consolidated for a few hours. Got another retracement to the BBC. Now we traded well through it. In fact, the zone is 2957/58. The low of this candle is exactly 58. See the low there, 2958? So it touched the zone there, touched the zone there. Support, support. And that sent us all the way back up through the BBC. Had a huge spike here, but in 30, now you only need 2 pennies to get your goal for the day. That's it, 2 pennies. A $1 move in silver is worth $5,000 per contract traded. The opening price last night was $29.34. So if we make it to $30.34, see the open, no, the open was $29.31. $29.31. So if we get to $30.31, which I don't think we'll do today, but maybe tomorrow, it'll be a $5,000 per contract move. Right now, we're in the process of retracing back to the BBC and the weekly zone. 2 good reasons for the market to find support there. That's support times 2. So if we make it back there, that area should hold, give us another leg to the upside. This high right here, as you can see, corresponds with this high from December 30th. When you hear me talk about market structure, that's exactly what I'm talking about. Now we've spiked blue and climbing, and so price is a bit trapped. Support at blue and climbing, resistance at the step line. So if we get back above the step line, then a simple trade would be something like $29.98 to $30. 2 pennies. $100 per contract traded. And the market's so bullish, I think we might just do that, exactly that. I don't think we're going to get the pullback all the way to the BBC. Although the step line is trying to cross blue and climbing, as you can see, they're aligned. So under normal market conditions, the step line will cross and we retrace to the BBC. And that brings us all the way around the world back to almost the low of December 20th, which was 58.66. That's this area right here with a step line. Crossed red and falling, turning it to blue and climbing, making that an important price, important area. And while we're not just straight dropping to it, in fact, if we go to the 30-minute, we'll see that there's been a retracement. See? Looks much smaller on the daily and much larger here. But that's what I mean by price rarely travels in a straight line. Now, this looks like price just dropped for 30 minutes and did nothing else. If you were watching it live in real time, you'd have probably seen it move down and then back up and then down and then back up and down and back up, and so you get the idea. So there you have it. Okay? We know where to expect support. And on the daily, that's major support. Okay? To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name and your phone number. We won't call you because we don't have a phone room or a sales department. What we will do is send you an email that explains everything it means to be a passport holder, and there will be a link that you can click so that you can become a member. Once you become a member, you'll have access to 2 hours of live training every trading day. 9 out of 10 new traders fail because they don't have a teacher. We provide you with a living, breathing teacher in live markets, real trades, real time, real money, 2 hours every trading day. On top of the group training, you get private one-on-one mentoring, the strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets and all time frames. You'll also get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening, the second they're published. Monday morning, you'll get the weekly trading zones at 6:15 a.m. Eastern. We've published the zones for our members every Monday for the past 15 years. That's a long time. 15 years.
All right.
Hey, buddy.
Hey, how are you?
And you'll also be able to attend the members only workshop every Thursday night, except not tonight, because we're not having one tonight, but we'll be back on schedule with a full week next week. Michael's going to give us a recap of everything that happened in the live training room this morning. Then we'll do some live trading on TradingView, and then I'll come back and wrap things up with our good word for the day.
Excellent. All right. Here we go.
Looks
you should
good.
be seeing my stuff. Good.
Yep.
All right. I got an extra thing going over here on this one. Let me see if I can get rid of that. No, I don't have to do that right now. All right. Here we go. Good afternoon, everyone. Happy New Year. Today is the 2nd day of January, 2025. So, January 2nd, 2013 to January 2nd, 2025. That's what? It's 11 full years. So we're beginning the 12th year of the spreadsheet now, I believe. Right. Is that right? I think so. 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. We're beginning our 13th year of the spreadsheet. Wow, 12 full years of my results. Anyway, If you have not taken a free trial with us, go here to mytradingiq.com, click on this purple button right here. There is no credit card required for the trial. When you click on that purple button, it's going to bring it to this registration page, which doesn't have a lot of days left in it, but we'll get that updated tomorrow. On this page, all that we ask for is your name, your email, and your phone number. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Okay, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. There are some multiple choice questions. Please answer those honestly, and we'll get your indicators indicating as quickly as we possibly can. All right. Now the spreadsheet. It's the first day of the year, so there's not a lot in the spreadsheet, but our first day of 2025 was better than our best day of 2024, and I anticipate 2025 is going to be like that. All right. So if you guys are out there and you're not doing what we're doing, and you're not up to speed with what we're doing, you really need to be, right? You really need to get up to speed with everything that we have going on. I'm pretty sure everybody in here right now is, but anybody that's watching on YouTube, you guys might not be. All right, so if you're going to read the spreadsheet, you have to read all the risk disclosures down at the bottom. I say that, I'm not even sure they're down there right now because I changed the spreadsheet around, but I will put them down there. You can read the CFTC risk disclosures at the bottom of the web page. Okay, it's all down here somewhere. Right here, CFTC risk disclosure. You can read that. All the same stuff. Anyway, today, the second day of January 2025, we're up 257 ticks on the NQ, 60 on the Russell, 1 on gold, and 93 on the ES. Puts it at 27.57 and a half on the morning session. Now that's with one contract. All right. I decided for 2025, I'm just going to try to trade 10 contracts straight through. All right, rather than start with one, add one every month and all that stuff. I'm going to trade with 10 contracts straight through, but I'm going to keep track of this over here as if you started with one contract. So I keep track of the 2420 blueprint, but I'm just going to trade with 10. And that way I don't have to make adjustments every month, and I can just be consistent. If you act consistent, your results would be consistent. Anyway, today it took 3 minutes and one trade to get to the goal for the day. At that point, we're up $4,000 with 10 contracts on. Okay, we had 10 contracts. We were up 32 ticks on the ES. Our very first trade was 32 ticks on the ES. It's a great way to start out the year. We took a total of 43 trades this morning, and I didn't get anywhere near all of them. And so on the morning session, we're up $2,757. So we're one trading day, averaging $2,757.50. So far this year, we've gone 1 day of getting our goal, 1 out of 1. We've gone 16 days since our last non-green day, and 410 business days since our last red day. All right, so this is a pretty good start to the year and the month and all that stuff. 27.57. All right. Now, this over here should not be divided by 0 anymore. I'll figure that out in a few minutes, but you don't need to concern yourself with that at this point, or this. I don't know what that's like that for, but I'll figure that out too. So let's get into the trades. We'll start out with the gold, since we only had a couple of trades on gold and just one little tick. It's not to say that there weren't a bunch of trades on gold, but we had one trade right here we got a break even on, and one trade here we got one tick on. Now, if you go through and look at all the trades that there were on gold starting here, there was a long trade from right here. Could have given you a goal for the day. A short trade from right here, that would have stopped you out. A long trade from right here, you would have gotten it right back. A short trade from right here would have given the goal for the day. A long trade from right here would have given the goal for the day. A long trade from right here, goal. A short trade from right here. I guess I got one tick profit on that, so it didn't stop me out. Then that turned into a long trade from right there that worked out to something. A long trade from right here was enough for the goal. A short trade right here was enough for the goal. You only need 10 ticks with the gold to get your goal for the day. Right? It's $10 a tick. You only need 10 ticks. And these are 9-tick range bars. So one full bar is just about the goal for the day. There was a long trade right here, goal. And that was pretty much it for the morning session. During the break, there was one short. There was a short right here. That would have been a stop out, I think. Maybe a break even, probably a stop out. There's a short right here would have been the goal, and a long right here that would have been a stop out. A long right here Depends where you got into it. If, right here, it should have been, could have been gold for the day on that one. And that was it for the gold. I'm not going to go through every single trade with every single market because some of them just had a tremendous number of trades. We traded mostly the ES today. Right? The NQ was all over the place. We didn't trade the NQ all that much. But on the Russell, we had a few trades. Where is that button? Oh, there it is right in front of me. Okay, on the Russell, we had a few trades. Our first trade in here, we picked up 10 ticks. Then our next trade, we picked up 20 to get us to 30. Then this trade here, we picked up 30 to get us to 60, and then we had to break even right there. Now, during the break, this is weird. During the break, there was a short trade here from the open of that bar. There was a long trade from the open of this bar, a short trade from the open of that bar, a long trade from the open of this bar, a long trade from the open of that bar, a long trade from the open of that bar, a long trade from the open of this bar. This would have been pretty close to stopping out. It wouldn't have, but it would have been really close. And a short trade from the open of this bar. So some really nice trades there during the break on the Russell. Okay. The ES was wild today, and we had a bunch of trades on the ES. So I'll just go through the trades that we actually did take. Okay, I won't go through all the ones that were available because there were just so many. We'll go all the way back. See all those red lines that I'm passing by? Those are all the trades. Those are a bunch of the trades that triggered that I didn't take. Look at all those right there. A bunch of them that triggered that I didn't take. Right? Starting right here, I think. Where's price? Here it is. Our very first trade was right here. We took that one. I got 32 ticks profit on it. Bang. Goal for the day. The next one was right here. I missed it. That was a valid trade. Goal for the day. Goal for the day. This one, the entry point would have been right here. That would have probably stopped you out. Goal for the day. Stop out. Goal for the day. Goal for the day. That one, you would have gone long from right here. That would have stopped you out. Goal for the day. 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 All that was in the first 15 minutes. But anyway, we got into some more trades here. I took a break even on that one. And here we went from 32 to 52. So I'm going to try to go through them all the ones that I actually did do. Went from 32 to 52, then went from 52 to 56, then went from 56 to 76, then went from 76 to 84. And then there's a stop out because we went from 84 down to 74. Then went from 74 to 83. I don't know where the stop out is. I don't look like I drew it in, but there was a stop out. And a whole bunch of trades right here. Then a break even. Then the stop out went from 83 down to 73. Then went from 73 to 89. Then there was another win in there. We went from 89 to 101. So we had a little small one to get us to 101. Then we stopped out, went down to 91. Break even. Then we get an 8 tick to get us to 99. Then I didn't count that one. Then we got a break even. Then we went from it's messed up in here. Went from 89 to 99, then from 99 down to 89, then we went back up to 93 right over here. Okay, and I think we got some more in there. We had a stop out there, another one there, another one there. It doesn't look like I kept track of those. And then we get into the break. Now, the ES was all over the place today. So what you need to think about is this, all right? This right here. When this goes in by itself, the bar after it is the trade. The open of the bar after it. When this goes in by itself, the open of the bar after is the trade. By itself, the open of the bar after is the trade. Okay. By itself, the open of the bar after. The open of the bar after. You guys see that? And there are so many trades. If you're just in here to get your goal for the day, then you should have been done in the first 5 minutes. A lot of the guys were done in the first 5 minutes today. A lot of them. Okay, see the open of the bar after. These are 7-tick range bars. So the open of this bar, if you got it here, and you should have gotten it because it went up before it went down, was 50.75, and it dropped all the way down here to 48.75. 12 ticks. I'm sorry, 8 ticks. 8 ticks right there. Easy 8 ticks, the goal for the day. Then right here, you could reverse it. Actually reversed it on this bar and gone long right there, the open of that bar. And the open of that bar was at 48.75, and that ran all the way up to 55.75. 7 points, 28 ticks. It's just incredible. Again and again and again and again. And you don't have to get every trade. You just have to get a couple of them. Get your goal for the day and then get the heck out of there. You don't need to trade every single trade, but you can see there are just so many. I'm just going through here and putting lines on every trade that you would have. Okay, if I just do the long trades, I'll just do the short trades. I'll just put red lines on the short trades. Okay, starting right here. A short trade right there. Short trade right there. A short trade right there. This is starting at 12.27. All right, let's put a mark on it, just so you guys see. Starting there, and just doing the short trades. Okay. Just doing the short trades up till now. All right, so just doing the short trades up till now, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 trades in there, something like that, without even looking at price. Let me see, I didn't have the question box up. I can see if anybody asked any questions. Yes, Happy New Year. Happy New Year, Joe. So without even looking at price, let's see what we did here. Okay, let me spread that back out a little bit. Starting right here. So you would have sold the open of that bar. Profit. Sold the open of that bar. Profit. Sold the open of that bar. Now that one, it might have stopped you out right here, right? But you had your goal for the day. Between that and that, you had your goal for the day several times over. You could have sold the open of that bar, profit. Sold the open of this bar, profit. Sold the open of this bar, profit. Sold the open of that bar, profit. Sold the open of this bar, that would have stopped you out. Sold the open of that bar, profit. And that was it. So 2 stop outs, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. 2 of them stop outs, 8 of them profit. I don't know, guys. And that was just the shorts. It doesn't get much easier than this. There's a long right here that's not working. Right here, so far, it's not working. But it's a valid trade. It's not too late to get into it. If I can find my DOM, it's still not too late to get into it. Okay, I just got into it right here, 88. And my stop's going to break even because I got 4 ticks in profit. But did you see how easy that was? I could have taken the entry point. The entry point was right here. Now it had pulled back a little bit before it started going up. I got into it at 88, so I got into it right there once it was going up a little bit more. But that's how easy it is. That is how easy it is. If I bring the DOM over like this, it's 112 right now. So we'll just leave my ES DOM over here and we'll take a few trades. Right? We're looking for this to get up into the overbought all by itself. That's all. Now close on this bar ought to do it. It didn't quite put it up there. Okay, but that's what we're looking for. For this to get up into the overbought all by itself. that last bar didn't paint. So let's put that like that, go there and back to there. Now we're getting a little choppy right here, and this is good. We like the chop, right? This stuff works great in the chop. So we need to get an up close and we'll sell it. If it gives us a down close, I don't know if it's going to be a trade because the black is already down there. So we'll have to wait and see. Okay, but this is it. This is all you have to do is just wait for the up close here now. Okay, we get the down close, and that's okay. Right there is okay. All right, 86. Well, the actual entry point should have been right here at 85.75, but I'm throwing my stop at break even. I'm going to lock in just one tick, and we're out just one. Okay, now my actual entry point should have been right here at 80. The open of this bar right here should have been here at 85.75, but I was in 86, and I just got one tick out of there. Okay, but you see how simple that is, right? It did go 4 ticks into profit. So I could have locked in more than one tick at one point. So now we're just waiting to see what happens. All right, the black led, so we're not going to take a trade here. We just wait. And we'll see on the down close, nothing yet on the down close. See, this chop right here is usually pretty good trading. And did it paint? Yeah, it painted. It didn't move the blue. The blue is what we're looking for here. You want to see the blue move. And there it is, but the blue didn't move far enough. The black led into the oversold. So now we just have to wait a few minutes and we'll see what happens. There it is. So I'm going to sell right there. No, I missed it. It's too late. Cancel it. Should have been the open of this bar right here. I missed it. Okay, but if we get a down close on this bar, I'll be in the next one. I'll be ready. There it is. It didn't make it into the oversold. I almost went, but it didn't make it into the oversold. I need a down close on this bar. Okay, and the black led, not the blue. So no trade here. And the blue is leading, so we need a down close. Yeah, we ought to be able to get in it here. There it is. So we're going to go right there. I missed it. Missed it again. But that was another one right there. Buying the open of that bar right there. Sorry, I missed it. This is just going really fast today. It's not normally as fast as this. But the NQ is even worse. The NQ's got a spread in it. So the NQ is harder to do today. And there it is. Come on, man. Okay, I'm going to have to stop doing the limit orders and start doing it the way that I normally do it. No, I just go right here. And I don't get a great entry that way, but I do get an entry. But on every one of these, I would have gotten profit. That one, and that one. Would have gotten profit on every one. Here we go. There. Okay, so now after 4 ticks in profit, I'll bump the stop to break even. There's 4. Lock in 1. Lock in 4. Lock in 6. And there it is. That's how easy it is. You see? So when it's choppy like this, you normally wouldn't want to trade at all. You know, if we put the context on here, you wouldn't want to trade in here at all normally, but this is great trading right here. Just short again right there. 4 ticks in profit. The stop's going to go to break even, and I should have locked in one or two. Did you see how easy that was? Again, over and over and over and over again. Normally you wouldn't even think about trading right here. We've been looking for a trade back here, where it pulled out of the overbought right here. Then it didn't put in a lower swing. So you've been looking at this, but the ribbon's too crunched up, so you wouldn't have sold that. You wouldn't have been looking for anything long right there. You wouldn't have been thinking anything short anywhere through here. Right here, you might have thought short. Right here, you wouldn't have thought short. You definitely wouldn't have been thinking long there and long there. But now it's setting up for a possible long trade right here. Right, we need a down close. See how the context isn't even needed anymore. Just get rid of that. Right, so we have 11 minutes left in here. And you can see how I would be up, 100 ticks on just the ES after this few minutes that I've done right here. Nothing. There was a question this morning about trades that go halfway, or moves that go halfway. I did create something for that over the holidays, but it's not quite ready yet. We'll see. We don't really need anything else, so I really don't want to introduce anything else for you. How do you know that the blue line is not going to stay below the red line for several bars? You don't. You don't, Stephen. I didn't know this one was going to stay down here. That's why we have the risk management. Okay. I didn't know this one was going to stay up here. That's what the risk management is for. You get your stop to break even, like this right here. This is a long trade right here, right? So it hasn't gone 4 ticks into profit yet, I don't think. But I don't know if it's going to stay down here now or not, right? But I know my risk management strategy says I have a 10-tick stop on this. If it stops me out, it stops me out. If it goes sideways for a little bit and I stay in the trade, then I move my stop to break even after I get 4 ticks in profit. Now that one did just stop me out. That happens. But I don't know. The question was, how do you know that the blue line is not going to stay below the red line for several bars? Like, how do I know that this is going to happen or isn't going to happen? I don't know that. Believe me, I've been trying to find a way to figure that out ahead of time. Oops, crap! I jumped on that one a little too early. That was a mistake. Right, I'm gonna throw my stop and break even on that. That was a mistake. I thought I had gotten into the overbought there. But believe me, I've been trying to figure that out. See if I can find a way that is going to keep you out of those trades. So I have created something that makes a gentler approach to the overbought and the oversold. Okay, that's part of the TV trade stuff. But this works just fine. That's the reason we have risk management. You don't know what it's going to do. Most of the time, it's going to do exactly what you want it to do, like right here. Okay, that's led into the overbought, so I sold it. Now I don't know if it's going to go sideways 3 or 4 bars here, but I'm risking 10 ticks, saying that it's not. Okay, and if we get 4 ticks in profit, then I'll bump my stop to break even. When we get 4 ticks in profit, I'll bump my stop to break even. And we haven't gotten it yet, but when we get it, my stop will go to break even, and then we'll see what happens from there. Now, hopefully I'm going to get it. I just think I have 2 stop outs in a row here, but It happens. And now it did just stop me out. But you see, I don't know if it's going to go 2 or 3 or 5. Or most of them will just do 1 or 2. Go back and look. And that's the pattern that we're looking for. That's the pattern we're expecting to repeat itself over and over. This right here is a long. See, now that's gone too far into profit from the entry point. The entry point was right here, 90.75, and it's already run up to 91.75. So I got to take the order off. I would normally be getting out of the trade right here. Okay. It should keep running up right here. It should. This should work its way up to here, and it's 2 bar lengths usually from here to here. From the oversold to the overbought and overbought to oversold. They're usually 2 bar lengths at least. Like this right here. 1 bar length, 2 bar lengths. 1 bar length, 2 bar lengths. All right. But you don't know that if it's gonna go sideways like that. Usually, if you get one that goes sideways, it's gonna be followed up by another one that goes sideways, because it goes sideways when you get into a trend. And then if you have a big trend, then the pullback is gonna be bigger, so you're likely to have a big pullback on the next move. You know, understanding the way that the markets work is good. You get one like this, that's your big leg up. You get one like this, that's leg back down. Then you get a little bit of chop in the middle. It would have given us a trade setup if we'd been in there. Then we had this one right here that I think I did something with. I don't remember, but this one right here that I just missed. It went Vortex into profit and ended up missing the trade. But this leg down, remember all the stuff that we do with leg lengths. It all still happens. None of that's changed. You know, the markets are all still doing the same thing. They're all still going, in this case, went up and then down and then up, and then you expect it to go down, right? It's all still the same. It's just that now we're trading it up and down. Right? Now we're trading it on the way up. Like we had these trades right in here. This one here. This one here. And then we had this one right here on the way down. And then we had this one right in here on the way down. And then we had this one right in here that I missed on the way up. And this one right in here. So maybe I did get that one stopped out. And this one right here on the way down. Stop to break even. Stop to plus a couple. Stop to plus 4. Stop to plus 6. And that was 6. Right here. See how easy that was. Usually when it gets into the overbought or the oversold, it's going to stay. It's not going to stay. It's going to just get there and get out. All right. If you're in a trending market, then it's more likely to stay there when you're in a trending market. So you have to be careful. When I say be careful, what I mean is understand what the market is trying to do. Right? Like right here, we were expecting a pullback. We're expecting a push down to this level right about here. Why? Because that's about how big this is right here. Let's move from there. Oops, from there to there. Right about there. You see what I mean? Now there's no trade here because they're both up here in the overbought. So we have to wait. But you see the trade setups, right? All right, so now the blue's leading the way down right here. So get ready for a long trade. All right, now my limit orders aren't working so well. So if I click here in the green, when we get the down close, and what that's going to do is put a limit order at the current bid. It's like saying buy bid. That's the equivalent of what it's doing. So we need the down close, the current bar, for that to happen. All right, and then I'll buy the bid, whatever the bid happens to be. There it is. So I'm buying the bid right there at 89. Stop goes to break even, and we'll see where it goes from here. There we go. Locking in 4. Locking in 8, 10, 12, 14, 16, 16. That was $3,000 right there. I think, wasn't it? $2,000. $2,000. Sorry. Simple as that. All right, well, I guess we'll wrap it up with that big trade right there. If you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com. Right here, mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. That's going to bring you to this registration page where all we ask for is your name, your email, your phone number. You're going to want to get TradingView. All right. You can give us your Ninja Trader Machine ID if you have it, but these indicators we only have on TradingView. So TradingView is free for 30 days, and then it's like $15 a month after that. You got to pay for the data. So the data is $7 a month. Right. That's all you got to do. You know, I had a guy today that signed up for the trial, and he signed up for it, and then he sent me an email after saying he didn't want to do the trial because he didn't want to have to get TradingView. He didn't want to have to pay for TradingView because he's an Ninja Trader user. And I said, okay, well, you know, in the room this morning, I made $25,000 with 10 contracts. But you're going to give up a chance to do that. You're going to make $2,500 because you don't want to pay $25, $30 a month for TradingView charts. It's just ridiculous. But he changed his mind. So get TradingView if you want to have these indicators. All right, these are only available on TradingView. The Ultimate Slingshot is only on TradingView, and the Range Trigger is only on TradingView. All right. To do that, if you don't know how to do that, go to mytradingiq.com, look at trading platforms right here, and follow the instructions right here. But this is all you need to do. All right. There's a link right here. You can click on this. It's going to bring you to this page, and on this page, click on monthly. And so it's $14.95 a month for the charts, plus $7 for the data. So $22 a month. You can easily make that up in no time at all. Right. Again, go to mytradingiq.com, click on the purple button. There is no credit card required for the trial. All right. That is it, everyone. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am.
Excellent.
Okay, recap of the morning session.
Today it took 3 minutes and 1 trade to get to $4,000.
Good job.
Thank you.
Great way to start the new year.
It was a fantastic start of the year.
All right, guys, for any of you that missed the first part of the broadcast, you can always catch it at youtube.com/CFRN. We broadcast live on our YouTube channel every trading day, simulcast, if you will. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. So, our good word for the day. This year, do first things first. Psalm 90:12. Teach us to number our days, that we may gain a heart of wisdom. We all get the same 24 hours a day. That's 1,440 minutes or 86,400 seconds. And we must give an account to God for how we use them. That's in Ecclesiastes 11:9. A good place to start is by asking yourself, how would I spend the next 24 hours if I knew I would stand before God tomorrow? Your answer can help prioritize your life. Think about it. If somebody steals your car, you can get another one. If they steal your wallet, a few phone calls to the credit card company will usually resolve the matter. But who can you call when you lose your time? How you spend your time is how you spend your life. Ephesians 5:16 says, making the best use of the time. So learn to do these. Number 1, stop saying yes to everybody. When your spiritual gut says no, but your people-pleasing gut says yes, go with your spiritual gut. Jesus did. It's what enabled him to tell his Father, I have glorified you on the earth. I have finished the work which you have given me to do. John 17:4. Don't let the good rob you of the best. Back off on some activities so you can excel in others. Number 2, be led by the Spirit, not the flesh. Paul says in Galatians 5:16, but I say walk by the Spirit, and you will not gratify the desires of the flesh. Furthermore, when you walk in the Spirit, you burn the oil, not the wick. The Holy Spirit supplies you with strength. And number 3, put first things first. A mark of real maturity is doing what you don't feel like doing when you don't feel like doing it. So this year, put first things first and keep them there. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.